Hello everyone, welcome back to this series of videos on amalgamation of companies from CA Intermediate Advanced Accounting. I am your CA Rajavardhan and I was helping you people understand this chapter of amalgamation of accounting. This is part 2 in the video series. In the part 1 we've already discussed amalgamation as the beginning and we discussed what is the weightage of this chapter of amalgamation in the past few examinations. I made it a point that I'll discuss all the topics questions from last two examinations, that is from December 21 and May 2022, but that will be later. So we just finished the introduction in part 1. In part 2 we'll be doing purchase consideration. Part 3 I'll discuss all the journal entries, and after that is when we're going to discuss the problems on this topic. So after discussing the past examination question trend, we also understood what to expect from this chapter. Questions can come on theory, determination of types of amalgamation, difference between each type of amalgamation, computation of PC, accounting entries and ledger in the books of transferor, accounting entries and transfer entries in the books of say transferee, and balance sheet in the books of transferee. And after that I questioned you what is amalgamation. I told you AS14 doesn't define amalgamation. Then we went on to say that AS14 gives reference to Companies Act. Companies Act doesn't define but explains what amalgamation means and what does it include, meaning that it also includes merger. Then we went on to understand what exactly is the difference between amalgamation, absorption, and what to say external reconstruction. Amalgamation, Vodafone Idea was the example. Went on to understand absorption, and then the case of external reconstruction, we saw how many companies, so meanings of each of these three types, and then we went on to understand the companies involved. What companies are involved in amalgamation? How many companies are involved? Basically, minimum of 3 companies, and absorption may minimum of 2 companies, and external reconstruction may again only 2 companies to be involved. How many companies will be liquidated in amalgamation? Minimum 2, and here minimum 1, and in the case of external reconstruction only 1. And we also saw internal reconstruction, sorry, incorporation in the case of amalgamation. There is incorporation in the case of amalgamation and external reconstruction, but not in the case of absorption. And the objective of going for amalgamation or absorption is to take advantage of large scale production and avoid competition. However, in the case of external reconstruction, it is to financially restructure the company. Get that? Then we went on to see the parties involved: transferor, the small company; transferee, the big company. Then we saw what does accounting standard 14 say. AS 14 says that accounting for amalgamation, AS 14 deals with amalgamation, absorption, and external reconstruction. AS 14 prescribes accounting only and only in the case of transferee company. Transferor company we don't know. And for the purpose of amalgamation, accounting standard 14, what to say, classifies the entire transactions into two categories: amalgamation in the nature of merger and amalgamation in the nature of purchase, which is decided based upon 5 conditions. And based on these 5 conditions, we determine whether it is merger or purchase. So what are these 5 conditions? And if these 5 conditions are fully satisfied, what would happen? It would become merger. Even if one out of these 5 conditions is not satisfied, it would become purchase. Now these 5 conditions are given in para 3E of accounting standard 14. Condition number 1 says that all assets and liabilities of transferor company should be taken over by transferee company. Condition number 2 says that minimum 90% of the shareholders of transferor company continue as shareholders of transferee company, and that 90% we don't include the transferor company shares. And condition number 3 says that consideration to shareholders of transferor company who agrees to become shareholders in transferee company should be only in the form of equity shares in transferor company, and exception is given for fractional shares which are settled in terms of. Then we discussed business of transferor company is intended to be carried on by transferee company. Then we discussed the last part, assets and liabilities of transferor company should be incorporated in the books of transferee company at their book value. Great. And the exception is given for change in the value for uniformity purpose. If the accounting policy is followed by both of the company are diverse, to unify that we can go ahead and then what to say change the value. So we discussed that, and we told that if it is amalgamation in the nature of merger, as per accounting standard 14, we account it under pooling of interest method. However, if it is amalgamation in the nature of merger, we are going to account it using purchase method. Accounting in the books of transferor is not told to us. AS 14 says, I don't know. We go by and then follow what is told by generally accepted accounting principles. which require us to do accounting in the form of dissolution, liquidation, or realization. So this is where we stopped, and we are supposed to start with the question, what is purchase consideration? So before I go ahead and then start discussion on what is purchase consideration, I have some exciting announcement for all of you people. This is with regard to the new batch that we're starting for May 2023 aspirants. This batch is called as Excel with Yeshas batch. This is an intermediate batch for all the aspirants writing exam in or preparing to write exam in May 2023. The batch has already started on 18th of August, but you can still take up subscription now and then join us, because this batch, all the classes will be available in the recorded platform as the common and greatest advantage that you get with Unacademy subscription. And in this particular batch, you get to learn from Karthikaya sir for law. You get to learn accountancy from Mayur sir, Ravikant sir, and me, CA Rajavardhan. Ravikant sir will be handling your accounting standards part, and then rest of the accounting will be handled by Mayur sir and me. And you will have Vijay Raja sir for taxation and Dhananjay Bhave sir for costing. So what are you waiting for? Join us in this beautiful journey and learn from Team Yeshas on Unacademy platform to make your dream of clearing CA intermediate come true. And the brief schedule of this batch is going to be this way. Vijay Raja sir started the batch on, let us say, 18th of August. The class timings were 7 a.m. to 2 p.m. And then we had classes from Mayur sir for accounts, few chapters are done. And then Ravikant sir also took few standards and it's done. And September 3rd, say it's Dhananjay Bhave sir handling costing. And you also have your tax running simultaneously in this month. And I'll be taking my part of accounts in the month of October. And also we'll have Karthikaya sir's law classes in the month of October. And from the month of October, the class will not be 7 a.m. to 2 p.m. It will be 7 to 9:30, 2.5 hour session with an half an hour break, 9:30 to 10, and another 2.5 hour session which is from 10 to 12:30. So 5 hours of class, 2.5 hours with half an hour break and 2.5 hours. If you have any of your juniors who are aiming to prepare for May 2023 examinations, please do refer this batch to them and then help them take the right level of preparation for their examination by joining this batch. And we would be very soon starting with a group 2 batch for May 2023 as well. That is, by the time this group 1 starts, it should start sometime in the month of November. So whoever is writing in May 2023, you can learn from us on YouTube using these videos for amalgamation, and you can also join us in the mainstream regular batch on the Unacademy platform. Done. So the batch highlights is this: you get to learn from India's best educators. 600 plus hours of live interactive classes will be available to you. Revision and then practice courses will be happening at regular intervals. There is structured courses and PDFs shared with you all. Unlimited recorded access to given to all the lectures to you people, and live tests and quiz will happen on an Academy platform like you always know. And here is a brief introduction of each of the educators whom you're going to learn from. Then the journey is this way. We started the batch in the month of August, which you can definitely pull up by watching the recorded sessions. By September, the 60% of the I would say the entire syllabus is expected to be complete. And by the end of October, we finish 100% of the syllabus. And in the month of November, you'll have a lot of time to revise previous year question papers, RTP, MTP, which I'll also be definitely helping you all with. I've already come out with videos on RTP. You can find this on this very YouTube channel. June 2022 or May 22 examination ka detailed solution video is there. On a lot of other topics, I'll definitely be coming back and then covering it you. In fact, there's a detailed series of 3-part videos or 4-part videos on liquidation of companies, free to watch here on the same YouTube channel what you're watching this. You can watch that. And now I'm doing amalgamation, and in the coming up time I'll come out with a lot of topics of your choice like banking, NBFC and also ESOP, buyback and lot more. So you can do major part of your learning here as well if you have willingness to learn. And by then we'll be starting with our group 2 classes also. Then you know the features of plus classes, live interactive classes, structured course PDFs, live tests and quizzes will be there to you. Open house will happen at regular intervals. Digital notes will be shared to you. You get to be part of Unacademy learning community and unlimited access of all of these features throughout your subscription period. If you want more and you're not just happy with plus features, you can take up iconic subscription. And taking up an iconic subscription will give you certain additional benefits like one-to-one live mentorship, printed study material coming to your doorstep, and also doubt solving sessions which will help you ace your exams at a different level altogether and ensure that there is no doubts remaining to you at any point of time. See, we definitely take up doubts in the regular class when you text us. Now there is a raise a hand feature. Talk to the faculty and then ask your doubt. You can also send a screenshot of your answer book and then take doubts. We'll definitely answer it in the chat. Even in the comments to this video, if you drop in a doubt, I'll definitely get back to you. Or you come back to us on the community and then ask it out. We'll get back. Or on the official Telegram channel, if you ask that out, there also will answer. If you still want a dedicated separate doubt solving session, it is possible with Unacademy iconic feature. Coming to the pricing model. The pricing of the subscription is this way. The plus subscription comes at a cost of 37,000 for 24 months. 18 month subscription is 34,000 and 12 month subscription is 27,500. A 6 months subscription is 21,500 and 4 month subscription is 17,250. If you want to take up iconic subscription, this comes at a cost of 59,000 for 24 months, 53,500 for 18 months, 43,800 for 12 months, 35,300 for 6 months. This is not the price that you would have to pay, because if you take up subscription by 30th of September, you have an amazing offer running which will give you discount of 20% on the prices that I just showed you right now. But to avail this 20% off, you would have to use the code Yeshas, which is YESHAS. And using this code Yeshas will give you 20% off on the prices that I showed you. So, and the price hike is expected very soon. And maybe in the month of, even if you're not writing your exam in the month of November, please take up your subscription right now for May batch or the next November batch, because the subscription prices are at the lowest and you're getting additional 20% off by using the code Yeshas. If in case you delay your subscription, there might not be availability of 20% discount price in the future, and the prices are going to get up and then go little higher than what it is right now. Take the maximum advantage. Before I go any further ahead, one last important thing for people who are writing their examination in November 2022, there is evaluated test series that's happening, using which you can test your preparations. Yeah, so 30, 60 and 100 marks, the level is going to increase unit wise, chapter wise, and 50% of the syllabus, 60% of the syllabus, that way. So you can take up this evaluated test series wherein the question paper will be set in the ICA pattern, corrected by skilled people, and they're going to give you detailed comments as to what exactly is the place where you're lacking. And monthly test is also conducted for every particular subject, and the choice with learner to solve the paper within 72 hours. It's not like I schedule it 2 o'clock on October 5th and you'd have to write at that time. We'll have 72 hours time frame, technically 3 days time frame for you to go back home, read the question and then get back with your answer. Yeah, once you solve it, you need to scan that and then upload your answer, and within 7 days it will be evaluated and the answers will be shared to you with feedback. The detailed answers, suggested notes with working note, and the feedback to your answers will be given to you to help you become better from you being good, or in fact you might end up becoming the best. So that's it. That's the tagline for evaluated test series. Test to be the best. That's with regard to this one. So what are we waiting for? Let's get back to amalgamation. Just a moment, let me take a small sip of water. So hello guys, we were discussing amalgamation in the previous video. We've discussed introduction to amalgamation in the previous video, and in this video, as I gave the little introduction in the last one, we are going to discuss purchase consideration. And in the next video, we'll be learning the journal entries for amalgamation. Come on, let's get started with introduction is done, purchase consideration. The question is, what is purchase consideration? Whatever I buy, I bought this mouse. To buy this mouse, what I paid is consideration. I bought this water bottle. When I bought this water bottle, what I paid is consideration. So consideration is something in return against a item that I acquired. Whenever I buy something, what I pay is consideration. Same is happening here also. Purchase consideration is what I pay when I acquire their business. Me as a company being transferee company, the one who is schooling. In Kannada, for receiving we say is-kodu. So the company which is schooling is transferee company. The one is which is giving is a transferor company. Me, transferee company, when I acquire the business of transferor company, I am receiving assets, liabilities and the entire business of transferor company. For receiving assets, liabilities and the business of the transferor company, I have to compensate them and then pay them money. So such money in any form that I pay to the transferor company is purchase consideration. So purchase consideration is what we pay to transferor company. But the people involved in transferor company can be categorized into three broad classifications. See, in the transferor company, there are three broad categories of people. Who are they? Number one, equity shareholders. Number two, preference shareholders. Number three, debenture holders. Now, my question is, I would definitely not be giving only shares or only debentures to transferor company. I can give my consideration in any form. Consideration is something in return, not specifically this particular item. It need not be cash. It need not be check. It need not be equity share. It need not be preference share only. It need not be debenture only. It can be combination of all of this. So I have given to the transferor company equity shares in transferee company, preference shares in transferee company, debentures in transferee company, cash as well as check. So when I've given purchase consideration in all of these five forms to transferor company will give some of it to equity shareholders, some of it to preference shareholders, and some of it to debenture holders. My question is, when equity shares, preference shares, debentures in transferee company and check as well as cash is given to equity shareholders, equity shares, preference shares, debentures in transferee company, and check and cash is given to preference shareholders. And again, equity shares, preference shares, and debentures in transferee company, and check and cash is given to debenture holders. What is PC? What is PC? Is everything given to every other person PC, or is it the things given to only equity shareholders PC, or is it the thing given to equity shareholders and preference shareholders that is PC, or is it like what we give that matters, like only equity shares given, whether it is to equity shareholders, whether it is to preference shareholders, or whether it is to debenture holders? Is that PC? That is the question. A lot of them don't take a pause here and then understand this concept, go down to do even problems on amalgamation and also clear CA intern, but they don't really have the clarity on what is purchase consideration. Life is not always a 14 marks question, my friend. You might survive the examination, but in the life you might get stuck at point. So let's have some conceptual clarity on what is PC. To summarize the question that I'm asking you, it's very simple. My question is it what we give that matters, or is it to whom we give that matters? Let me rephrase my question. Let me repeat my question. Is it what we give that matters, or is it to whom we give that matters? Is it like what is given to these people is PC, irrespective of what you give? Or is it like, no, to whom we give doesn't matter. What are we giving? If we are giving shares, it is PC. If we are giving debentures, it is not PC. Is it that way? I want you to think, take a pause, take a deep breath, think, write down the answer on the paper, and then listen to my explanation. Did you write? I hope you did. Now let me tell you. What matters is to whom we give and not what we give. What does matter? What matters is to whom are we giving and not about what are we giving. So if you are giving it to equity shareholders and giving it to preference shareholders of transferor company, the small company, no matter what you give them, whether you give them equity shares, you give them preference shares, you give them debentures, you give them check, you give them cash, it is still PC. It is still PC. But to debenture holders of transferor company, no matter what you give, it is never PC. So it's about to whom are you giving, not about what you are giving. Even if you give debentures to equity shareholders of transferor company, it is PC. But if you give equity shares to debenture holders of transferor company, not PC. Why? Hey, you acquired their business, you acquired their assets and liabilities. So what you give is PC. Right? You are acquiring their business. Transferors, assets, liabilities, and business is what is acquired by transferee. So whatever purchase consideration is given by transferee is to transferor company's owners, the one who owns those assets, one who is liable to pay those liabilities. Are debenture holders owners of assets? No, incorrect. Assets, liabilities, entire thing. The ownership is with shareholders. Now don't bring this concept of equity shareholders are the true owners. What? Preference shareholders are false owners. Huh? No, preference shareholders are also owners. Preference shareholders are owners with preferential rights when it comes to distribution of dividend and repayment of capital. When everyone is standing in queue to collect dividend and to collect money on capital, that is redemption of shares or buyback. Buyback is not possible with regard to preference shares. We call it redemption. Redemption is not possible with regard to equity. When the capital is repaid or when the dividend is paid and all the shareholders are standing in queue, some people stand ahead in the queue. That people who stand ahead in the queue are preference shareholders. So preference shareholders are also shareholders. Now don't bring in the true owners, false owners. No. Owners. Owners of the company are equity shareholders and preference shareholders. To this equity and preference shareholders, whatever we give is PC. Whatever we give in any form, PC. Whether it is equity shares, preference shares, debentures, check or cash. So the thumb line or conclusion is very simple. What really matters is to whom we give. What really matters is to whom we give and not about what we give. You get that? So equity shares, preference shares, debentures, cash, check given to the shareholders of the transferor company is what we call as purchase consideration. I hope you understood. Any form of money in any form given to debenture holders is not part of PC. I hope you understood. I'll show the screen to you for a brief 10 seconds. If you want, you can pause and then take a screenshot or note it down. Or like I mentioned in the past, if you want the PDF copy of this, you can drop in a message to me. You can find me. My name is CA Rajavardhan A. Or you can also call me accounts man, like people from the student community usually call. Search me, ping me, take this PDF if it can help you in exam preparation. Yes, I hope you have. Come on, let's get going. Now we'll talk about computation of purchase consideration. How to compute purchase consideration? There are several forms or several methods of computing purchase consideration. The first one is called as lump sum method, or I'll also call this as student's favorite method. Lump sum method, what happens is like you pack all the money into one bag. No, they will tell this much is PC. The question all by itself will say PC is 14 lakh, PC is 25 lakh, PC is 30 lakh. They will tell it is computed, agreed by transferor, transferee, and if you see examination perspective, this lump sum amount is mentioned and then shared to us by way of a clear mention in the question. That is lump sum method. So under this method, transferee company agrees to pay a lump sum or fixed amount to shareholders of transferor company. Need not be in cash. Need not be in cash, but lump sum amount is told to us, and this money is to be paid by transferee company to transferor company. Got that, guys? What do we have next? What do we have after this is second method. This is called as payment method. What is it called? Payment method. Under payment method, they will not tell the lump sum amount, but they will tell various forms in which we are paying. They will tell these many equity shares are given at this rate. These many preference shares are given at this rate. These many debentures are issued at this much premium. This much of cash is given. These many equity shares are given in transferee company for these many equity shares which are there in transferor company. So they'll give that ratio. For 3 shares in transferor, you will get 2 shares in transferee. For every 1 share in transferor, you get 2 debentures in transferee. For every 1 share in transferor, you get 10 rupees cash. So they'll give various modes and forms of payment. So we will take these modes and forms of payment which is given in English, compare it with the transferor's balance sheet and then multiply or exchange ratio. You basically compute. Total them up, that is nothing but lump sum amount as PC. You get that? So if they give the total, it is lump sum method. If they give the breakup, it is payment method. Sometimes it can so happen that they'll give payments, you would have to find total. Sometimes they'll give total, you might have to actually find breakup of that payments. You know why? When we go down to discuss accounting entries, which we're going to do in the next video, you would need the split. If you don't know the split, how can you pass the accounting entry? So lump sum method and payment method are like brother and sister. They go together. You get that? So payment method. Various forms and modes will be told to us and we'll find the total piece. Have a look. Under this method, details of payment made by the transferee company to equity and preference shareholders of the transferor company is provided. And we basically compute the total PC. Let's now go to the third method. Third method is called as NATO method. Sir, NATO we read in social science at 10th. No. This is different. I call it NATO. The expansion or the abbreviated form is net assets taken over method. What is it? Net assets taken over method. So there we go. We have the next method, net assets taken over method or net assets method, NAM or NAT. What is this? Transferor company's assets, liabilities and business is taken over by transferee. When we're taking the asset, we keep one paper, we keep one pen. A land and building. Okay, a land and building, I'll take it 15 lakh. Next, what do you have? Plant and machinery. Okay, 8 lakh. Motor vehicle. See, all Gujari type it is 1 lakh. Then what do you have? Plant, furniture. Okay, furniture. 50,000. So like this, they'll note down the prices, agree the prices at which the transferee and transferor are willing to exchange these. So transferor also will have say, transferee will say, furniture will rate 50. Then transfer will say, hey, 50 is very less, yeah. I can sell it on OLX for 60,000. Transferee will say, 55. Transferor will be like, okay, 55. So they agree upon the value like this. So this agreed value of assets will be written total. That is not net assets. That is total assets at agreed value. Then liabilities of the transferor company will also be written at agreed value. Less creditors, bills payable, bank, or everything they'll deduct. Then what we arrive at is net assets. Meaning net assets at agreed value taken over by transferee from transferor. In this net assets computation, certain assets can be left out. Now transferee doesn't want to take that land and building, or transferee doesn't want to take that plant and machinery, or doesn't want to take that furniture, or transferor is not willing to sell that land and building. They are selling the business, but they'll retain that land. Is that possible? Very much possible. Sir, but doesn't that make it amalgamation in the nature of purchase? Yes. If you remember 5 conditions that we discussed in the last video, if you have forgotten, you can go back to part 1 and then see that all the assets and liabilities of transferor should be transferred to transferee. If any asset is not transferred by transferor or not taken over by transferee, it becomes amalgamation in the nature of purchase. That is okay. But all the assets taken over by transferee company at the agreed value less liabilities taken over by transferee company at the agreed value, if you do, you get net assets taken over. They say this is PC. This is PC. That is net asset method. Or they say NATO net assets plus 1 lakh is PC. Net assets plus 1 lakh is PC. Whatever net assets you compute, you need to pay that plus 1 lakh. Like auto driver asks, no, sir, meter mele 10 rupees. Like that, NATO mele 10,000. NATO mele 10,000 is PC. Meter mele 10 rupees is auto. I hope you understood that. So that's how net asset method works. Get this? Very good. And just to hit upon what we already discussed, when you take over these assets at agreed value, what will happen? सोचा है क्या तुमने क्या कभी सोचा है ये क्या सभी सोचा है सोचा नहीं तो सोचो अभी. The question is, under net assets taken over method, transferee company will take over the assets and liabilities of transferor company at agreed value. That is the value other than book value. When you take it over at a value other than book value, what will happen? You can answer. It will lead to failure of condition that we had discussed in the past. Let me show it to you. We had discussed 5 conditions. Here you remember amalgamation in the nature to decide whether it is purchase or merger. We discussed condition. In that, one of the condition that we had is that all the assets and liabilities should be taken over. First condition. Last condition, it should be taken over at book value. So when you do NATO method, if you don't take over all the assets, or even if you take over all the assets and liabilities but not at its book value and change the value to agreed value, it straight away becomes amalgamation in the nature of purchase. Why? You might be failing to fulfill either condition number 1 or condition number 5 as per para 3e of AS 14. If it becomes amalgamation in the nature of purchase, your accounting changes from pooling of interest method to purchase method. Your accounting changes from pooling of interest method to purchase method. Did you guys understand? Great. Quite happy the fact that you remember. If you have not watched part 1 My request to all of you will be, please do go back and then watch part 1 of amalgamation. It is there right before this video. It's a very interesting one and it's going to make you conceptually very strong. Got that, guys? So going back, this is net asset method. So net asset method में PC is computed as agreed value of assets minus agreed value of liabilities taken over, CL. Under this method, consideration to be paid by transferee company, very good, is arrived based on the value of the assets less outside liabilities of transferor, small company, taken over by transferee company. That is under third method, which is net assets method. Then we have the last one, method number 4, computation of purchase consideration. What is fourth method? This is called as intrinsic value method. What is it called as? Intrinsic value method. You can also call this balance sheet approach or balance sheet method. What is this? Now, to understand this, you need to go for a little backstory. Whenever you go for merger, one company is liquidating and the shareholders of that company should get shares in the other company. Agree? Whenever the shareholders of transferor company gets the shares of transferee company, how and what proportion do they get? We tell some ratio, no? Shareholders of transferor company, for every 3 shares held in transferor company, they get 2 shares in transferee company. For every 5 shares in transferor company, they get 3 shares in transferee company. They say this ratio. How do you arrive at this ratio? How do you arrive at this 5:3, 2:3, 1:2, or 6:8, whatever ratio? How do you arrive at it? Now, throughout, when we did lump sum payment net asset method, which company's balance sheet are we taking and then taking assets and liabilities and then valuing? Throughout, we are valuing assets and liabilities of transferor company. Transferor company is getting liquidated or it's being taken over. So we value the assets of transferor, we value the liabilities of transferor, we deduct the value of assets of transferor from the value of liabilities of transferor. Then we'll understand the net asset value of the transferor company. Are we giving cash to transferor company? Assume the transferor company's net value comes to 10 lakh. Are we giving 10 lakh cash? We're giving 10 lakh cash, good. If I am giving 10 lakh rupees purchase consideration by way of shares in my transferee company, then my transferee company's share will have some value. Who decided that value? 10 lakh rupees is that company's shares, no? Net asset. I will say my company's share value is 1 lakh per share. I'll give only 10 shares. Or I'll say my company's one share is 10 lakh rupees. I'll give only one share. No, I valued their company's assets and liabilities. Valuation should happen to transferee company's assets and liabilities also. So we'll value the share value of each share of transferee company. Assume that we arrive at 1000 rupees as the value. Then we'll say 1000 rupees is my company's share value. Their company's share value is 500. Each share, we arrived at 10 lakh, no? We'll divide by number of shares. 10 lakh is net asset value, assets at agreed value, that's liabilities at agreed value. If you deduct, you'll get net asset value. Or in FM, you do NATESH, net assets available to equity shareholders. So you take that, you divide by number of equity shares of transferor. You get each share value of transferor. Similarly, we'll do for transferee. Transferee is each asset at market price minus each liability at market price. We get the net asset value per share. So we have per share value of transferee, per share value of transfer. We compare these two to arrive at the exchange ratio. If transferee companies each share is 1000 rupees and transferor companies each share is 500 rupees. So 2 shares of transferor is equal to 1 share of transferee. 2 shares of transferor is equal to 1 share of transferee. 500 per share into 2 shares is 1000. 1 share of transferee is 1000 into 1 is 1000. 500 into 2 is 1000. So for every 2 shares held in transferor company, we give 1 share in transferee company. This is intrinsic value method. There are interesting questions on this also which needs to be learnt in your exam preparation. The time permits, towards the end I'll do one more video in which I'll be discussing one question based on intrinsic value method. There's one nice problem called big and huge limited, big limited, huge limited. So, and there's one A limited, B limited question also. So I'll try and do one of the questions. If you have any other question on amalgamation which you want me to do, let me know in the comments so that I'll solve that question also. If you got that, guys, I've kept myself a target of 5 to 6 parts max, not more than that. That's about totally 4.5 5 hours for entire amalgamation, which you usually learn for 20 hours or 25 hours odd in the regular class. I'm gonna finish it up in this much, but give you 100% concept in depth, not like overview also. In depth conceptual knowledge with problem practice. Not all the problems, but I'll do 1 2 problems, which with which I'll explain the entire thing in those problems always. Got that, guys? Yeah, that's intrinsic value. In fact, I'll show you some recent happening that is there. Recent happening, HDFC, NBFC, HDFC, which is an NBFC, and HDFC Bank merged. So there was agreed ratio there given also. Okay, wait, fine, let me show. See, HDFC Bank and HDFC merger ratio. The share exchange ratio of amalgamation of the corporation with and into HDFC Bank will be 42 equity shares of face value rupees 1 each for every 25 fully paid up equity shares. So HDFC Corporation and HDFC Bank, my ratio was 42 shares for 25 shares. 42 shares for 25 shares. So 42 is to 25. Computing this ratio itself is a big task, which you can be doing in the future. And you people get to start working on this mergers and acquisition. People usually specialize in tax. People usually specialize in assurance, internal audit. So they specialize on one subject in the future, indirect taxes or something. Indirect taxes or direct taxes or transfer pricing. But let me tell you something. Just this chapter of amalgamation itself is a wing in lot of big fours and lot of big firms. They have one separate department in the firm called as M&A, mergers and acquisition, which exclusively deals only with amalgamations, mergers and corporate restructuring. So this chapter is not just 15-20 marks in your exam. This chapter can become your career choice also. Maybe post qualification for the date till the date you retire, you might work only in M&A department. Now, in fact, I had a student whom I had taught 2.5 years ago. A student of mine for foundation as well as inter. 2.5 years ago, when she cleared her inter, she had texted me asking, "Sir, I'm joining GT, but the vacancy is there only in M&A part. Can I take it up, like to specialization right in the beginning? Is it a good choice?" So I was so surprised. People post qualification think that they don't want to specialize immediately. They want to be master of, or say, a jack of all rather than being master of one. But in the modern time, the specialization is growing so big that you're getting to specialize not only in tax or audit, but you're getting to specialize in M&A during your articleship. So 3 years of M&A internship specialization in M&A. If you qualify, and then trust me, you have immense experience, you have such nice career opportunities going forward. You are very clear you want to get into only this wing, but it's not like you're trying a lot of jobs. You have very specific job portfolio to look at. But if you talk about the pay, if you talk about the exposure, if you talk about the expertise, if you talk about the need for that job that you're trained for, will be immense. Trust me, you'll be doing way nice and amazing quality work if in case you do that. So if anyone has this opportunity to work on M&As during your internship, go for it, boy. Go for it. Yeah, we were discussing intrinsic value method. Let's quickly finish that. Intrinsic value method, as I mentioned, it is with balance sheet. We find the balance sheet value. Under this method, consideration is calculated at intrinsic value of shares of the transferor and transferee to determine the exchange ratio. Get that? So once we compute this, we compare our net assets with PC. PC is what we give as a transferee when we take over the business of transferor. As a transferee, when you take over the business assets and liabilities of transferor, what we give them is purchase consideration. Let me repeat, what we give them is purchase consideration. What we get from them, assets and liabilities, net of it is called NATO. So what we get, NATO. Transferee perspective, what we get, NATO. What we give, PC. They both should be equal. If in case what I'm giving is more than what I'm getting, or what I'm giving is less than what I'm getting, that difference is to be accounted. The difference is to be accounted. That difference will be either profit or loss. Profit here is capital profit, loss here is capital. If in case what I'm paying as purchase consideration is more than what I'm getting in NATO, I'm incurring loss, which is capital loss. This capital loss is called as goodwill. And if in case what I am getting is more and what I'm giving is less, my PC is less, NATO is more, it is capital profit to me. That will be transferred to capital. Let me repeat. PC is what I give, net assets is what I get. If I give more PC and get less value of net assets, transferee company is paying more than what it's receiving. Such amount what they paid more beyond NATO is capital loss to transferee, and it should be transferred to goodwill account. The benefit of it will be taken over a longer period, so we'll transfer to goodwill and amortize it over the next few years. You get that, you'll read in AS 26. If in case the PC that I pay is less and the net assets that I'm getting is more, net assets that I'm getting is more than the PC that I give, then I'm making profit. I'm making such profit will be called as capital reserve. Let me show this to you. Difference between purchase consideration and net assets taken over is what we're discussing. So if my purchase consideration is greater than NATO, I'm paying more, that is capital loss, which will be transferred to goodwill account. PC minus NATO is goodwill. In an alternative scenario, if my purchase consideration is less and what I'm getting from net assets of transferor is more, I'm making profit, such profit will be transferred to capital reserve. Get that? That's it. Now next in case we need to discuss journal entries, but before that let me show this to you. If anyone wants to take a note of this computation of PC but could not take note because I just scrolled through, I'll show this to you for 10 seconds. You can take a screenshot of this or write this down. I'll give a small pause, maybe of 10-20 seconds. Yes, I hope you did. Next, I'll show you this part. You can take a small screenshot or note this down into your book. Difference between PC and NATO, how to deal with it. Got that? Fantastic, guys. So this is with regard to part 2 of amalgamation. Very soon you will be able to see part 3, in which I'll discuss the accounting entries in the books of transferor, accounting entries in the books of transferee, and how to prepare balance sheet after amalgamation in the coming up video. Will be very eagerly waiting to see you all in that video. I hope you will all join me and watch that video. I hope. And I hope you finish this part 1 and part 2 by then. Done. That's it, guys. Just to keep you people informed, if you're writing exam in November 2022, I'm coming up with a last minute revision marathon for your CA Intermediate November 2022 advanced accounting examination. The entire revision will happen in about 200 minutes. All the chapters. I promise you, all the chapters other than accounting standards. Yeah, so you can definitely stay tuned for that. I'll give you more updates on that very soon. That's it. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something new or having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in the battle. So thumb rule to stay happy is pretty simple. It is to stay in the game. For one last time on this day, I have just one simple question for all of you. Are we in the game? I hope the answer is yes, we are in the game. See you all in the next video on amalgamation. Till then, tata, bye bye, take care, and get lost.